Yeah, and I think for anyone that's been following these plays and following us since the beginning of the year, whenever we started accumulating these positions, it's like if you've held through this range from hell this entire year to sell now, it's like you just walked 500 miles to get to your destination, and now you're on the doorstep of where you've been trying to get to.
Right.
You can't capitulate on the doorstep after you just walked 500 miles. It's
Right.
like you can't do it. So it's like if you've already made it to this point, number one, you're already up hundreds of multiples, or not hundreds of multiples, but hundreds of percent on your positions. Even if you got in a little bit later on the cycle, compared to where we're at right now, even if you bought the Pico top of the boys club members, you're still down maybe 30%, 40% if you've bought and just held from the top. So it's like, yeah, you might be down 30 to 40% on your positions. Worst case scenario, assuming you bought the absolute top of every single asset that we've talked about, it doesn't matter. Like, who cares? It's like, yeah, you just have to have conviction. You can't capitulate on the doorstep.
Yep. And this is why data is so important, and doing TA on these charts gives you confidence, is because now you have something to base it off of. If you have confidence in the data and what's going on and you understand what's happening, you're going to hold through everything. If you're somebody who just buys things on Coinbase or on Robinhood and you just watch up and down your number, your bank account or your account value go up and down, you're going to be trading completely based off of emotion. There's no data behind it. There's no thesis. There's no system or process in place to make you profitable over a long enough time frame. You're literally just going based off of feelings, right? You can't do that, because people who trade based off of feelings, and this is just like everything in life when it comes to business and making money, if you operate based off of emotions, you will never win. People who operate based off of emotions within business and within, you know, making money, which is essentially math, emotions don't offer you any advantage, only disadvantages. So you need to know what the data is so that you're confident what's happening on the long term, so then you don't get afraid. You don't get fucking emotional about what's going on.
So ignoring that wick down in March 2020, just because I think that was
March.
around the back in 2020. So yeah, ignoring that one because that was COVID.
Uh-huh.
The following pullback, what was the percentage on that one?
This one, what do you mean? Like up here?
No, one pullback over from like that big red candle with the two wicks. It's like following it was back in 2020, like July, October, or around October 2020.
This one right here?
Yeah,
Okay, so from this top down here.
yeah.
Got you.
So I know it looks small in the grand scheme of things, but I think
Yeah, only 35%.
yeah, and I mean that's we're not even dealing with anything that that dramatic right now.
Exactly. Our pullback right now is way less. So look at this. This is how you guys have to understand how a bull market works. It's a great point that Bauer said that. So this right here looks insignificant on the chart, but that's a 35, 36% pullback. If we would have had that right now, you guys would have been fucking shitting yourselves. You would have been, running through walls, calling your wife, telling her we gotta, you're probably gonna divorce me. All this, like your life would have been over. Uh, so 36% pullback, right? And then look what happens right after that 30% pullback. Whoop. Fucking up only. Parabola. Boom. There you go. You see? Like, that's healthy for bull markets. That's healthy for bull runs. Look, 35, 36% pullback. You literally go fucking straight up only. And then the next major pullback was this one right here. So let's see what that percentage was. Oh, you rats. Now, you guys really would have lost it there. 62%. But here's the thing. With this one, this is in May. Yeah, in May. You guys know sell in May, go away. So this one, you would have front ran it if you knew what you were doing. So, like, for example, myself and Logan, we would have sold by then. You sell in May, go away. You get this 61% correction, pull back, and then you get this repump into the end of the year for the second top. But yeah, you typically, ideally, are going to be exiting the market in these candles right here. All right, you're not trying to time the top perfectly and be that guy who says, "Oh, I called the top. I got it this time. I know when it's going to top." No, you don't. You don't know when it's going to top. You sell into these candles right here. You take your profits. You leave little moon bags just in case, and then boom, you get your nuke. All right, fine, you're out of the market. So, but that's what I'm saying, and that's what Logan's saying is you get this massive correction right here, 35, 36%. You're holding through this one. This one you hold through. You're accumulating down here. You're getting these generational entries, and then bang, you got parabola. You're up only. And these are weekly candles. This is every single week. It's just up, 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 up for fucking how many weeks straight? Months. Fucking, yeah, fucking 5, 6 months. Just straight up.
Yeah, and it's like if you look at the size of some of those candles, it's like during those weeks, yeah, it's like
Almost 2x right here, just in this candle.
yeah, and it's like during that week period, who knows what could have happened? You know, it's like that almost 2x that ended up closing positive that week. During that week, there could have been a 50, 60% pullback. It's like whenever you have that much volatility, the higher we go, the more volatile these markets are going to get. So, yeah, I mean, it's just like the one that happened right there. I mean, what's that red candle?
Yeah, that's exactly what I just thought.
So yeah,
33%. Boom. Weekly candle. And then boom, pumping again.
yeah. So it's like that was a 33% pullback. Yeah, it's like for where we're at right now, that'd be Ethereum pulling back from 3,300 to almost 2,000. It's like if that happened right now, everyone would be everyone would be disintegrating. It's like it'd be the end of the world. But
Exactly.
yeah, it's like whenever you have that kind of crazy volatility to the upside, it's going to happen both ways. So it's like, yeah, you guys can think it's over all you want to, but these institutions know what they're doing. These market makers know what they're doing. They're not afraid. Like they're just thanking God for the entries that they're getting. That's what we've been doing too.
Yep. And the other confidence you should draw from the fact there's Ethereum ETFs now is the fact that, correct, diminishing returns are going to enter in the market to a degree to the upside. Now, this cycle, I believe that that effect is not going to take place as much because the catalyst that we have now is that we actually really do have way more liquidity, way more money pouring into the markets, being that these institutions can start to invest into Bitcoin and Ethereum. But the downside is also going to be muted as well because these institutions aren't going to allow these assets to fucking completely crumble and go to zero.